data presented here is mainly from my own web searches. I suggest that you do your own research from scratch. This is presented just to give some ideas of the sort of data that might be useful to search for. There's a fair amount of data summarized in this short clip, and it might benefit from more than one watch. If you've considered the KVT offering, then you'll have seen what appear to be fantastical returns on Blueprint, page 38. Where this is most obvious is the year 5 numbers, so let's focus on them. The question is, do they have any basis in reality? One key feature is that as the Kinesis monetary system grows, the transaction fee pool will increase, but it will always be divided by 300,000 KVTs. So KVT yields will grow in direct proportion to the growth of the system and the collected fees. We do need to understand what each of the inputs are for the transaction fee pool. There are only two real inputs to KVT yields, that's volume and KCC volume. Volume is the total value of payments made in K-coins. The KCC volume is the proportion of this that happens for marketplace transactions. Debit card payments based on K-coins also count towards these. From these, we calculate the fee pool, take 20% share of it due to KVTs, and divide by 300,000. Ideally, the volume would be sourced independently, but it can be derived from market cap and velocity. Market cap is the value of K-coins in existence. Velocity is the percentage of that market cap that's turned over every day. We'll look at volume and velocity of existing currencies and take a closer look at market cap in relation to the gold market. I only managed to find two solid volume figures, and it wasn't 100% clear which region the second related to. So we'll focus on US Bank Deposit Volume from 2010. Government are unlikely to make or receive payments in Kinesis, but with 2%, less than 2% of direct volume, we can probably factor them out by reducing volume and velocity by 1 to 2%. We have a couple of fiat currency velocity figures. The first is US Bank Deposits at 38% in 2010, and UK banknotes at 52% in 2014. We also have some crypto numbers, but they're not really being used as everyday currencies. My best guess from adjusting the US bank deposits data forward to 2017 is 27% velocity. The blueprint references market cap as a small percentage of above ground gold. Since there's a strong incentive for new mine supply to be minted into Kinesis, I'm going to assume that Kinesis will capture 500 tons in 5 years in this way. For the remainder, I've tightened up the definition of what's potentially available to see if the percentage rises to unrealistic levels. I'm going to assume that private investment gold is the only gold that can readily be transferred into Kinesis. Here are the transaction volumes of some of the existing online marketplaces. We'll relate KCC to eBay for comparison purposes. So, now that we've looked at some real-world numbers, let's compare some projections to them. We have the blueprint numbers here, along with a mid-range and a break-even projection. I've converted the market caps to gold tons, then taken off and assumed 500 tons over 5 years from minting miners, then compared the remaining amount to total private investment gold of 40,000 tons. Now, for the blueprint, 14% of this is significant, although it could happen if projected yields play out. 2.5% seems fairly moderate for the mid-range and break-even setups. I've compared the volume figure to 2010 US Bank Deposits Volume because it's the only solid figure I have. The current bank deposits volume will likely be a higher figure, and a global equivalent would be a multiple of that. Over 4% looks chunky for the blueprint, though that could be significantly overstated, especially if we could find a recent global volume figure for comparison. KCC volume has been quoted in terms of the number of current eBays it's equivalent to. This looks very high for the blueprint, though given that not much is yet known about the KCC, it's possible that KCC will have a much wider remit than just an online marketplace. The break-even projection produces a yield of 10% of the KVT cost price in year 1, which would underpin the capital value of KVTs at that cost price. It seems likely that at worst, the velocity will exceed that of Bitcoin and Ethereum, so if you think that the market cap is reasonable, there seems to be a decent margin for error. The caveat to all this, of course, is that if Kinesis doesn't launch for whatever reason, then there won't be any transaction fees or KVT yields. Accepting that as a risk, I think we can say that the blueprint numbers do have a basis in reality, though with the information that we have, the KCC numbers look a bit of a stretch. Hopefully, what I've described in this clip will provide some ideas for your own analysis. Now I'd like to introduce Paul to give you a brief walkthrough of his calculator. This is something into which you can plug numbers from your own research and get your own projections. By the way, Paul's from the Netherlands.
Here you see the KVT calculator. With this calculator you can calculate the yields you will get if you buy one or more KVTs. Okay, now I shall show you how which effect it will have if you change values in the market cap. So look at the KVT yields here from year 1, $2,700, all the way up to year 5 with $168,000. So we go to the market cap. We see here there is an infiltration rate of 0.1% in the gold market. Let's say we will also have 0.1% infiltration in the market of safe deposits and all paper coins in the world, and that this will not grow very hard, but a little bit to 0.2% in the 4th year and in the 5th year. So you see the volume here in the lowest row is changed. Now we go back to the Kinesis yield top, and you see in year 1 the yield for one KVT instead of $2,700 is $9,000, and in year 5 instead of $168,000 it is $184,000. And what you can do is, if you say, well, I have 2 KVTs, well, that's fine, then the numbers are changed.